Just giving it a couple of seconds to get everybody on. This is a real quick video. Of course, it may end up not being a quick video, but I wanted to show you the difference between listening to a person that is a licensed insurance agent versus someone who just stands up on stage and presents his information. This is what a life insurance agent will do for you to make sure and show you both sides and make sure that you understand the difference between a whole life insurance policy, what it gives you, a term life insurance policy, and what that gives you. So I created a spreadsheet, and so let me go into that a little bit. The spreadsheet that I created it's a very rough draft, but I wanted to get it out to you today on Facebook and YouTube so you can see the difference between buying term and investing versus buying a whole life and letting the life insurance carriers do the investing for you, provide for your family. I do want to say a caveat: term policies only pay out about 3 to 12%, and I'm being very generous on the 12% of the time. So that's a minimum of 88% of the time that term policy works like your home and auto policy, where you're paying for it on a monthly or yearly basis, but you hope you never have to file the claim. Life insurance, we're each only guaranteed one life and one death in this life. My 5th grade teacher would say there's 2 things in life that are guaranteed, and that's death and taxes. Well, the good thing about the life insurance policy, the recipients of the death benefit do not pay any income tax on that income. So it's considered a life insurance policy claim payout, and there's no taxes paid out on that. So let's get into it, and let me show you the screen, and let's keep our fingers crossed that it works this time. So we're going to imagine that today, these are all numbers that I ran today as if you were 30, 60, 74, 84 today. So these numbers can adjust later, when you are those ages. I just wanted to give you, just to show you what happens when you are these ages, and basically show you both sides of the coin. So here we have term policy here, so let's just concentrate on that. A term policy, if you buy it at age 30, it's very cheap. That's, don't go Starbucks 4 times in the month and you'll pay for that policy. But what are you getting for that $38 a month? If you're still alive at age 60, you now have to pay the insurance company $156. At age 74, yes, I can do a 15-year, which would go to 75, but the problem is the plan I can get you at 74, I cannot get you at 75. I cannot get you a $300,000 death benefit at age 75 with my carriers. So that's why I did the 60 to 74. And then that is only a 10-year policy. So at age 84, we have to get you another policy. And guess what? This $389 a month for 84 to your death only is a $25,000 death benefit claim. So yes, it looks good until you reach age 74 versus what the whole life policies are. But what are you getting for that? And what is your family going to receive in the end? So this is the things that you've got to look at for you and your family, the difference between the plans and which one you should go with. There is no cash value in this. It's like your home and auto insurance. If you don't file a claim, you don't get the money. So the whole life, so let's look at these two now. The whole life, if you set it up this way, you will pay this premium, guaranteed that this is your premium until you pass away. So if you live to age 95, you've paid the $280 a month for 780 months. There's also an option in some of the whole life carriers that will let you only pay to age 65. So it's called a paid up premium at age 65. And so at age 65, when you retire, you don't have to worry about that $300 coming out of your Social Security check now versus out of your regular paycheck. So it's 300, it's less than $340 a month. That's expensive. That's a car payment, that could be money towards your child's college education. But let me show you. So you've got these two plans. They're building cash value. Once there's cash value in there, depending on the policy, you can borrow from that cash value at any time. So you can borrow against your cash value to pay for your child's education. You can borrow from that cash value to pay for your car. You can borrow from that cash value to even pay your mortgage. You can borrow from that cash value to help pay down other debts. So is this an expense or is this an investment? So now let's look at this part, because I actually took it out to show you how much you're actually paying. So if you follow the advice from the non-insurance agent, well, I guess now he is an insurance agent. The state of Texas made him get his license if he was going to give insurance advice. Okay, enough said on that. So the first 30 years, you only pay out $13,000. So, no big deal over 30 years, right? But you live to the age 95. From age 74 and beyond, that 21 years, you've paid into that for $51,000 for a $25,000 death benefit. You've paid in twice what your family's going to receive. Over that 65 years, you've paid, you've lost $68,000 worth of buying power that you've got over here. So it's a death benefit of $300,000. You've paid in here $218,000. Here, on the one that you only paid to age 65, you only paid in $140,000. Your family gets almost $160,000 more than what you paid in. Plus the fact, because it is a whole life insurance policy. Let me stop sharing my screen so you can see my eyes. So because you've paid into a whole life policy that's building cash value, that cash value is from interest earned. So you're building up the cash value, you're building interest in that account. The death benefit is going to be more than the $300,000 that your family's going to receive. So that those numbers are really lower than what your family's going to receive at your death. And the fact that you can use that money at any point you need once there's cash value built into the policy. So that's what I wanted you to see today. I wanted you to see the difference between the term and a whole. It's up to you on which side you want to go with. Just know that it's going to be more expensive the older you get. So let's look at the difference between the term and the whole and figure out what's best for you and your family in the end. This is Karen Burkholder, Lone Star Legacy Insurance, protecting your family one policy at a time. I hope you have a great day.